All right, everybody, Eric here. Let's talk about tax liens and how you can invest and buy in these things. We've been asked a lot about this lately. But first, if you like technology, you like money, and you like real estate, please subscribe and like the video. We've got all kinds of stuff related to all three and on how all three tie together and ultimately make money. All right, so tax liens. So first off, what the heck is a tax lien and why is it an investment vehicle that maybe you're interested in? So if you own a property, in most states in the country, they have property taxes. And if you don't pay those property taxes, the state, the cities, the counties, they all have to get paid. They have a budget and they expect to get paid. And if you own a property, it's got a dollar amount on it and those are the taxes you pay. But what happens if you don't pay those taxes? Well, they still get their money and they sell your debt if it's not paid within the year, and they let other people, investors like myself, bid on these property tax liens, and we bid on them based on the interest rates that we're bidding on. And so I'll dig down into that in a minute, but there's actually two types of tax liens that you can buy. And so the first one I just covered. It is all about bidding, and there's a special time of year to do this. And this is pretty standard across the country. And you can bid on a tax lien that's 0% interest. And I don't know why anybody in their mind would do that, but they'll let you do it. So be careful. All the way up to, depending on the state, 32% interest rate on these tax liens. And so that's the first kind. The second kind is if they don't get bid on and nobody buys these tax liens, they go to an open market and you can buy them at any time at a standard tax rate that's set by the county. And most of the time, you got to be really careful with these because these are junk. These are things that have not been paid for years. They're right-of-ways that nobody cares about. There's a lot of caveats there. It's basically the leftover junk. And while there may be some gold nuggets in there, be careful. You may not do too well by buying stuff. So you've got to pay attention to the time of year when the bidding comes up in your area. And you don't have to be a resident to bid on these. You can bid on them from other states and other counties. So the key here, though, is research. And I'll explain why. And so I'm going to focus on the bidding tax liens because those are the most exciting. And so first and foremost, when somebody doesn't pay their tax debt, they often have to list it, the county or the state who's ever running these auctions. They list it in a newspaper, they list it online of all the tax debtors that have unpaid properties. And they generally list the parcel, they list the address, and they list the owner or the debtor of the property. And thanks to the internet, it has really, really changed the way this works now. You can Google them. You can take a look at the property, the parcels on the county's website. You can find out, what years they've paid, what years they haven't, what the property address is, what the boundary is. I mean, you can see everything. You can see in a lot of cases even who the first lien holder is and the second lien holder, and maybe if there's none. I mean, so I'm just a guy doing a YouTube video, so take my advice with a grain of salt, but I'm going to tell you kind of how you're going to do your research on this. And so first of all, you're going to get that list and you need to get it on opening day. I'm in a place called Yavapai County. We do ours in February. That list gets published in December. So as soon as that list gets published, you start looking through it. You look at the dollars amounts that these people or maybe even companies are past due. You look at the properties. You look at how long they've done it. One key factor is you also want to be aware of if anybody else has previous year's tax liens on this, because that is a big deal. And I'll go into that in a minute as to why, because technically down the road you could foreclose on these properties, but we'll get to that. So you're looking at the amount. First of all, you got to decide how much you're going to spend, because this is could be a long-term investment, up to 2 or 3 years. You are going to tie up that money. The owner of the property could pay it off the day after the bid. They could sit on it for 2 or 3 years, and then you have to move into foreclosing on the property to get your money back. Again, we'll talk about that in a minute. So the list gets published. You're going to go through. You're going to find out what interests you. Is it raw land? Is it properties with houses on it? Is it whatever it may be? Is it commercial? Maybe you're interested in right-of-ways. I don't know why you'd be, but you're going to look into the properties and do your research, and you're going to identify how much you're going to spend, because in a lot of cases, you're going to have to deposit 10% of that immediately. And then you're going to get to bidding. And when I mean bidding, it's a weird bid. It's a reverse bid. Instead of you bidding up on how much you're going to buy that property for or buy that lien for, you're going to bid down. So I said it's up to 32% interest. It depends on the state. Our state here is, I think, 16% is the max. And you're going to bid down, and you're bidding against everybody else. And there are some big funds getting into this game because this is easy, safe money, and they don't have to make a lot of money on this. So they'll bid it at 4 or 5% interest because that's good against the interest rate right now. So you're going to place a bid. The bid started as high as they'll let you go, and then you'll bid down. And whoever bids on the lowest interest rate for buying that note wins. So if you put in a bid for 16% and somebody else comes in behind you, they like that same property, and they put a bid in for 15%, they got it. It's done. It's theirs as soon as the auction closes. So you want to be realistic. It would be nice to get 16% on every single one of these, but you're not going to get it. In most cases, get a reasonable expectation. I'm seeing them between 8 and 12% is generally what the bids that I've gotten. So now you've won, you've bid, everything's complete, now what? So you had to put your 10% in. They immediately say, okay, you won. You've got to pay off. You pay it off in full. You're paying the county so that they can use that money, and now you hold the note. In my county, they will do the collection for us. But in other counties, it's different. Other state, it's different as well. So they are going to work on collecting it. If the buyer or the owner of the property pays off the note, they're going to pay the county, and the county is going to pay me off with the interest. So I don't have to worry about collecting or doing any of that. So what happens if another year rolls around and they don't pay off that interest? Well, first of all, or that note. So first of all, you keep getting interest. It's going to keep on going until it's resolved. You probably want to bid on that same property a second year in a row. And again, in the state of Arizona, after 3 years, you can foreclose on this property. And it rarely happens, but you can do it. And that's why it's important. You don't want to bid on any properties that somebody else has already bid on, because you're going to be fighting at the end of the day trying to foreclose on that if it comes to that. Same thing with other note holders, mortgage holders, and things like that. You got to be really careful, because if it comes to a foreclosure, all of you are going to be in the courtroom trying to get your money. And the likeliness that everybody's going to get paid is going to be slim, even though these notes have a very high priority. So back to the piece there. So second year rolls around, you've not been paid, you're still accruing their interest. There's nothing you can do except for, keep writing down the interest in the notebook, and that's what they're doing for you. They're keeping track of it. The property comes up again, you bid again on this year's taxes, or I guess it would be last year's taxes, and now you're note owner on that place for 2 years. Now again, it's dependent on the state and the county at what point you can foreclose, but in the state of Arizona, you can foreclose at the third year. So let's say this all happens again, it's not been paid for 3 years, you own all 3 notes for all 3 years, you can start a traditional foreclosure process, and you can take possession of that property once that process is complete. Again, very complicated. I wouldn't bid on properties that, just haven't been, have other mortgages, have other lien holders. I certainly wouldn't touch one that has a first and second mortgage on it. And keep in mind, a lot of these are not $1 million homes that somebody just forgot to pay the tax bill. A lot of these are bare, raw land that somebody inherited, or somebody doesn't want to deal with right now. They don't have a payment on the property. They don't have a loan on the property. And it's just sitting out there, and it's been forgotten about. And that's what 90% of these are. So just keep that in mind when you're going down this process. The chances of you foreclosing on a multi-million-dollar property and hitting a gold mine in this is slim. But the interest rates are good, and that's what you got to keep in mind. Yes, it's a long-term tie-up of your money, but those are really good interest rates. And how can you come even close to that in the market today? And so that's a high level. I'd love to do more videos about this. Maybe I'll film the auction process that we're going to be doing here shortly. It's really interesting. Not a whole lot of people know about this. It's exciting. I don't want to say it's easy money, because you have to do your research, but it's smart money. And once you do the work, it just sits out there and it collects interest, and you don't have to worry about it. But keep in mind, you just can't cash out and liquidate that. When they're tied up, keep in mind it's going to be tied up for months, if not years. So that's kind of the deal with tax liens. I love doing it. I'm excited about it. Hopefully somebody got something out of this and they're going to try it this year in their county, or maybe some other county. So again, thank you for watching. Please like and share. If you have questions, please put it in the comments. Thank you.